And welcome back to KTN Morning Express. My name is Michael Karanja. Now, my guest today considers himself an eclectic entrepreneur. He's also the 2013 Forbes East African Entrepreneur of the Year winner. And by now, I'm sure you know who I'm talking about. Yes, my guest is Peter Ndwati, the CEO of Resolution Health. Peter, welcome very much to the show.
Thank you very much.
Peter, just looking at the journey for Resolution Health, 2002 is when the company started in earnest.
Yeah.
Give us just this journey before Resolution. You started as Resolution Health. Just give us the journey to where Resolution started and the dream you had for actually investing in an insurance firm.
All right. At that time, I spent just slightly over 10 years in the health insurance industry and 12 years in the general insurance field. I always had a dream. First of all, my dream was to set up my own business.
Yeah.
Of course, when you're dreaming in high school, you're not sure what kind of business you're going to set up. But having cut my teeth in the insurance industry, it was very clear that I should set up an insurance business.
Yeah.
Of course, at that time, I wasn't dreaming of a Pan-African business or an East African business. But I did a business plan in 1997. And the process of actualizing that business plan only came after I got a job with a South African firm called Metropolitan Health. Yeah. And the deal didn't work out. I was there for about 6-7 months. And after that, I decided, why don't I go raise capital and start my own business like I'm planning to.
Yeah. And just looking at that, 12 years in the game, what are some of the challenges that you face? Because the biggest challenges for entrepreneurs coming up is that they start, something goes wrong somewhere, they quit in like first 3 years of a business. 12 years you've been in the game. How's that been for you?
Resilient,
yeah,
and dreaming big. I've always felt that I have hardly scratched the surface when people say your business is successful and all that. The challenges come every year. If you look at what we're facing in 2002, yeah, and what we're facing today, they're all different things. You just have to be ready. You wake up every day to face challenges, and I guess it's anticipating those challenges that makes a business a success. I never at any single time thought I'm going to give this up.
Yeah.
If you know me, I don't give up. When I start on a project, I actually see it through. So I'm what you call a starter finisher. So in 2002, for example, if you look at the industry, there was what were called HMOs at that point. Yeah. They were collapsing left, right, and center, and everyone was thinking, I was crazy. Why would you go into this industry where the public image is not very good, the companies around you are collapsing,
uptake is low.
Exactly, and I was saying, look, I understand this business. I know you can do it profitably, and I have a larger dream. I want to enter the insurance industry through the health insurance way, and then go to a general insurance, and that dream is coming to fruition now.
Yeah. Just looking at the health insurance is one of those segments that perhaps what we hear now from IRAs, it's prone to a lot of fraud. How have you managed to keep that? How did you manage to keep that business successful for the 10 or so years that it was actually working as a health insurance business?
You have to try and understand, and as I said, anticipate what the changes in the industry. This year is very bad. We are all making losses. And in 12 years, I've never made a loss. Let's first talk about the fraud issue that you brought up. Yeah. There are two kinds of frauds in our industry. The first level of fraud is what is called identification fraud, which simply means you look like me, or we're the same age, you take my card and go and see a doctor, and then we'll have to pay. Or someone duplicates your card. That has been sort of sorted out by technology now that we're using biometrics, that you need a thumbprint even if you are a child to see a doctor. That has been sorted out. The one that is more complicated and difficult around the world to sort out is collusion. It's where you and your service provider decide that we are going to treat you, but the report we will get to say what you're treated for something else that is coverable. Very difficult to deal with that. So what we have done as an industry is identify preferred providers that you can work with, you can trust. Yeah. You can trust them when they give you a report. So you don't allow your clients to see all and sundry kinds of providers. The third and the most difficult, again, very, very hard to take care of, is overutilization, where when you see a doctor and you say, look, I'm insured, and then they overutilize. They do unnecessary tests. they overprescribe
for a common cold.
Yes, and that happens. So that you end up costing it into the scheme.
Yeah. Just looking at those kind of schemes, are you confident in the way the regulator is tackling some of these issues?
Actually, one of the things I'd like to commend is the regulator and the way he's handling it.
Yeah.
The only part he has failed right now is to curb what is called what's undercutting.
Yeah.
Let me give you an example. In 2005, our net return was 12%.
Yeah.
Now we are doing a 4% return. What has happened is the general insurance field, those days we were more specialists ourselves, and AAR was specialists in the field. The other general insurers have found that for them to get market share, they need to go to medical insurance because it's the highest growing. I mean, 2012, we grew by 47%.
Yeah.
Last year, we grew by 38%. So for cash flow and to capture market share, all the general insurers go into that particular space. They don't have their expertise. So the only way to enter that space is have a market penetration price. So undercutting has happened a lot. I find that they are schemes to get undercutting as high as 30%.
Yeah.
Well, already you're not making money on them. And that cannot go well. The future, as I see it, is there has to be a bit more regulation, especially on the pricing. Nobody can just come in and decide, like, I'm going to undercut.
Yeah.
I'm going to undercut the big players. But having said that, still we have managed to survive and grow the business, and we are going to the second phase of our growth.
And just looking at Resolution Health was one of those companies that came out very Resolution Insurance. Sorry,
Yeah.
I'll keep making that mistake.
Yeah. Resolution Health still does exist.
It does exist.
That's a holding company. Yes.
Yes.
Yeah.
But just looking at that business, you were the first ones to come out and say, "Look, will chronic ailments
Yes,
come?
we'll
Will
cover you."
What made you take that decision, and now that we're seeing other insurance firms replicating the same?
First of all, on the issue of innovation, every time we design a product, we know that 3-4 months later, someone will copy it and try and charge less.
Yeah.
But back to your point, when we came into this field and we launched our first product in November 2003, we identified areas that the insurance companies were not covering. For example, we came up with the individual maternity product when everyone was afraid and thinking maternity is a loss leader. And now you can't find a medical insurance product without maternity. In 2004, we underwrote HIV as the first insurance company to actually write HIV. We understood that HIV can be done profitably. Now we have even insurance companies around the world who only do HIV insurance. But when we came into the market, we did our calculation, we had started with our actuaries and came up with a product that made sense. And actually it took 3 or 4 years before anybody came into that space, and HIV insurance was very profitable. We moved on to chronic illness. It's just understanding the risks, working a way of how you can cover them, making sure that it's not selective. One of the problems the insurance companies tend to do is what you try and exclude is what people will try and hide over. But if you cover it, people end up giving you information about it. The doctors give you information about it. So the trick comes on how you manage it. You find
Changing perception.
Exactly. And also in the operations department, you find we employ medics.
Yeah.
So different from the rest of the insurance industry, we employ the experts in a particular area to manage that, and that's how we grew. So 2 years ago, we decided that now we need to go to the next field, and we want to convert the business to a general insurer. We have created a good brand. We need to leverage on this brand to introduce other much more profitable insurance lines, and that's the reason why we applied for an insurance license, and we registered the business Resolution Insurance, which is fully owned by Resolution Health. We intend to change, by the way, the name from Resolution Health to Resolution Group. In view of the direction we're going, health will end up being a misnomer. You don't want to say, oh, my vehicle is insured by Resolution Health, or my house is insured by Resolution Health. Hence the reason why the brand Resolution Insurance is important.
But it talks great volumes of how you've been able to cultivate an interesting brand with Resolution Health. Yeah. Just looking at that, you're already invested in this insurance business.
Correct.
It's a business that uptake has remained very low, even as you move into general insurance.
True.
At under 3.4% by any standards is very low in terms of uptake.
It's not too bad. We are number 4 in Africa in terms of that. Think about Nigeria and their size. They are much behind us. I like removing that perception that and making people understand the uptake and actual penetration. What we say by 3.4% is the percentage of insurance, the percentage of what insurance contributes to the GDP. Not actually the purchase. We actually have more than 10% of Kenyans with private health insurance. But leave that as it may. The growth of our industry is an average compounded of about 20% per year. Last year, in the whole world, we're the second.
Yeah.
Jordan were number 1, and then we're number 2. So it's not exactly that bad. What we haven't done is grown penetration. And in Africa, after South Africa, number 1,
Yeah.
followed by Mauritius, followed by Botswana, and we are number 4. And if you look at the growth of our economy and the initiatives we as an industry are taking, our regulator is taking, and the level of education of our target market, we are actually going to reach that 6-7% in a very short time. It's targeted by 2020, we should be at around 8%.
But just looking at that, because you mentioned innovation, how innovative is this? How innovative are the players in this market in terms of designing and tailoring products, whether profitable or not so profitable, in terms of just giving people access to insurance?
Okay. The health insurance industry has been very innovative.
Yeah.
As you can see, every year there are new products coming up that make sense. And even right now, as guys are in the lab, the products we're working on for next year. What has happened is on the general insurance side, the life insurance side, there haven't been much innovation, and the growth has been slower. But that can't continue with the large players coming in, with investment coming into that space. That's going to change. My perception is, I think we are too many insurance companies in terms of the people who are operating in the space. 42, 43 insurance companies for our economy is too much. What I would like to see is what we've seen happen in the West, in Nigeria, for example, where there was consolidation. To have maybe 12 strong insurance companies with strong balance sheets. Now, and it's a reason why we are seeing metamorphosis in our business, partial exits, putting more capital in the business to make sure that we are strong enough to take that particular space. Now, the same aggression, the same innovation that we have applied the last 12 years in the health insurance field is the same one we want to take into the general insurance place. I don't want to go to the general insurance place and become an Osran or another insurance company, copy the same policies being written by other people. But the direction we're going, we want to be leaders in energy, oil, and gas. We don't have anybody who's taken that particular space. So what do we require to get into that space? We require skills, we require systems, okay, and require
capital.
And obviously, the underlying number is what you talked about, capital. Yeah. And that's why you're seeing us in this particular space. It doesn't mean that we will not write a typical fire policy. We'll still write that. But the differentiator is the kind of innovation we're coming into. I'm telling you, some of the products that we're talking about right now are game changers. We've already demonstrated that we can come into a space and make a difference. But create a brand that is relevant to the people. Now, you must have seen in our press release last week, us talking about the emerging consumer.
Yep.
There's a consumer who typically the insurance industry has ignored. People who have identified that consumer is banking. These are people who typically live on about $5 a day. A family costs $5 a day. Those are people who are currently financially excluded. We want to bring them into financial inclusion, and that's our target market. I am not coming into this space to come and try and create a churn, take business from my competition. I want to go out into a uncharted waters.
Create new lines.
Yes, it is so much. It might take these 12 million people currently who can afford insurance, and there are no products that they can afford for various reasons. The products will be available, but distribution is wrong.
Yeah.
Because we are all using traditional distribution, brokers, agents. There's no company in Kenya today doing what is called direct sales, a call center and all that. There's no company there's an attempt, there's a foray recently on distribution on the mobile platform. Many insurance companies are trying bank assurance, what is called alternative distribution, but no one is doing distribution through retailers, for example. And those are the spaces that we want to take advantage. We want to take advantage of new products, new markets, new distribution mechanisms.
Just looking at the insurance market, it looks like one of those most dynamic sectors that we have currently. You talk of 42 and you talk of being many, but we're looking at people like even Prudential who are willing to come into this market.
Yeah.
Just looking at all the changes that are happening over the last few years and where you hope to see the insurance industry, how confident are you that we'll actually get to our desired target?
Certainly. This year alone, we've seen five private equity deals coming in, and they are all companies that some of them are previously here. You know, Prudential used to be in Kenya. They exited. There is something that they are seeing. If you look at and as we hear, there are 4 deals right now waiting approval. At least I know 3 that my intelligence tells me that are definitely going to happen this year, where either foreign insurance companies are going to acquire, or PEs are coming into this market to invest. Now, if you look at our growth rate, as I said, an average of 20%, it's one of the highest in the world. I mean, it's the second highest in the world, actually. If you look at that emerging consumer, if you look at our macroeconomics factors, insurance is the next direction to go. Look at the insurance counters at the Nairobi Stock Exchange, the return people are making, and we only have 3 listed counters. There's room for Kenyans to participate in that particular space, and watch this space. I even think that the regulator may actually have to give licenses to give license to new entrants with strong capital. From what we hear in the market, three top banks have taken licenses of insurance. The market needs that kind of particular level of injection. If I was anybody out who's listening to me, put your money in the insurance counters. You'll do very well.
Just looking at your company,
yes.
We've already seen 2 Ps. One came in, exited, another one is coming in. Right. ADC exited, Leapfrog is now in. In terms of capital injection, where do you see, in terms of an insurance firm such as yourself, in terms of capital, how much is required just to drive, not even necessarily expansion, but just to drive yourself into innovating into some of those products? Like you talk about oil and gas, you can't go and underwrite oil and gas risks with a certain level of capital.
Yes. I've just raised 1.6 billion shillings.
Yeah.
And that 1.6 billion shillings will enable me to do 4 things. One, our Tanzania business, Resolution Insurance Tanzania, is a monoline provider, is a health insurer. We want to convert that to a general insurer. In Uganda, we are partners with IAA. We call IAA Resolution. We need to take advantage of the Ugandan market right now, especially in the oil and gas field, and we want to convert that partnership to a general insurer. In Kenya, in part of that 1.6 billion, we are injecting 800 million in the Kenyan business. Yeah. That 800 million is to enable us to get systems, tap talent, to be able to be competitive in the general insurance space. But come back, let's go back to your question. I'll answer it in 2 ways. Currently, the minimum share capital required for a general insurer is 300 million. It's nowhere near enough, in my opinion. We are moving to what is called risk-based underwriting, risk-based regulation, where you'll be judged by the amount of business that you're writing and told to keep up that capital. So you need to continually keep raising capital, either by capitalizing your current earnings or injecting more capital. So we decided to go, why don't we just inject that 800 million in one go, in addition to our 300, to make sure that we are competitive. But this can't be it. The way I see the projections of the business in the next 3-4 years, we'll have to raise capital again, because we want to go to the life insurance field also. As an insurer, you don't just want to look now at health and general, you also need to look at life. So we probably will require more capital. And the identification of Leapfrog as a partner came from that background. They just raised $400 million on their new fund, out of which they are earmarking $100 million for East Africa. We should take advantage of that funding being available, because the market is there for the taking. Yeah. As long as you have the right talent, which I keep repeating, talent is key. Then systems, and then making sure that you have the capital. So I believe with a paid up capital of about 800 million, you can be able to leverage and take advantage of these new emerging areas of insurance, energy, oil and gas.
You seem to favor the private equity route. Yes. Haven't you considered listing at one point?
We actually, in our last 5-year strategic plan, we're supposed to list next year. Right. Now, the problem with listing, it's a bit expensive and onerous. We felt, let's do another raise on private equity, and then we still want to list. We still want to list in about 2019. Listing is always a better way for your customers to participate in your business, and it's always a better way to unlock shareholder value. Obviously, as a shareholder, I want to build wealth based on the business having grown to the level it has. But I don't feel we are yet there yet. We are seeing smaller businesses listing, going to the alternative market route as a way of raising capital. I don't think for our business we are ready yet. Our business needs, first of all, to capture that East African landscape. Make sure that the brand is acceptable. You want everybody in the market to know your brand exists. And most important, you want to make sure that your return is better. 4% is actually nearly not there. We are looking at maybe a net of about 10%.
Yeah.
A lot of it coming from investment income. Then we can go into the market.
So it's a matter of making Resolution Insurance attractive.
Yeah, to the buyer. You know, as I said, if you look at the list of businesses we have, actually their return is hardly coming from insurance. Yeah. They're real estate businesses, investment income. They're making investment income mostly more than underwriting profit. We want to get there before we actually list. You don't want to list and you're competing with a bigger brand, have been there for 50 years, 60 years. And people will just will compare your price earning to those companies. So we believe in the next 5 years, where we are targeting to do 33 billion by 2019, and we believe by that time we'll be in the top 3 insurance businesses in the region, not just in Kenya. And at that point, it will be a better offering to the market. Then our current partners can unlock their value, because PEs don't stay in for a long time.
Just looking at that, you've obviously mentioned where you've seen life insurance is where you perhaps want to go into, but what are some of the other products that you actually see and you actually just can't wait to get into that kind of business?
I'm hoping my competitors will start reading and knowing what I'm going to do next. On the personal lines field, there's been no innovation. If an insurance company approaches you, Michael, they'll offer you a motor product, a fire product. There are other things that people are ignoring. For example, I know that you're married. People are doing weddings every day. There are mishaps that happen in a wedding. Really? Who covers them? What happens in your wedding if your vendor, the wedding organizer, went away with your money? Okay. What happens if it's rained? What happens?
You're hoping for a sunny wedding.
I'm just giving you as an example, right? There are so many facets of your life that should be protected, but insurance companies are not protecting. Either they don't feel there's a market for it, or they don't see any need to design products at that point. Yeah. Those are some of the areas that we want to come and make a change. On the business end, everyone will offer a business. Will offer a business, for example, a fire policy, a burglary policy, or maybe work injury benefits,
household insurance.
Yeah, that's not for a business. That's what they'll offer. Who worries about consequential loss? Fine, I cover your building, but it burns down. But you not only lose that, but you're going to lose business. The consequence of the fire, so consequential loss. A lot of people, yes, a few people are trying to do it, but there's not much innovation at it. Look at directors' liabilities. All of us as directors of businesses sit on serious liabilities that would incur to us as individuals on a business. Again, there are people who are taking products and fronting them from other markets and fronting them. We want to go into that space. So there's many products that we want to come into the market and
so offer. It's about thinking out of the proverbial box.
Correct.
Peter Nduati, in about a minute, where do you hope to see Resolution Insurance in the next 5 years?
2019, as I said, in the top 3 in East Africa and as a listed counter in the Nairobi Stock Exchange.
All right, thank you very much. Thank you very much. That has been Peter Nduati, CEO of Resolution Insurance, just telling us more about the business and the insurance scape as a whole. We take a short commercial break, but when we come back, person of interest is Ann Waiguru, so you definitely don't miss that. Don't go too far.